Testing, testing. Hello. Okay, hi everyone. Welcome to today's webinar. So before we get started, we're just going to give a couple more minutes to let more people join our session before we get started. So for today's session, we're going to be talking about support and resistance. This is the first part of our two-part series on support and resistance. So for today, we're going to be focusing on pullbacks, overlaps, and swings. So feel free to let me know in the chat if you have any questions throughout the webinar. And we will begin in a few more minutes. I think we'll begin at about 8:05. Yeah, but let me know if the audio is okay and if you can see my slides as well. And grab yourselves a drink in the meantime, and I'll see you guys in a few more minutes. Okay, let's go ahead and get started. So, hi Joe, welcome to today's webinar. So, as I mentioned earlier, today we're going to be talking about support and resistance, focusing on pullbacks, overlaps, and swings. So let's go ahead and get right into it. So I'm Melanie. I will be your presenter for today. I'm representing Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019, 2020, and 2021. Okay, here is our agenda for today. Firstly, we're going to be looking at using swings for support and resistance levels. And then we're going to be looking at how we can identify pullbacks or rather starting points before going into pullbacks and overlaps. Then we're going to combine these pullbacks and overlaps to find really strong support and resistance levels. And then we're going to use support and resistance in combination with some Fibonacci levels. And if we have time at the end of the slides, we'll definitely go through a couple of setups. So feel free to let me know in the chat if there are any specific charts that you'd like me to go through. Okay. So let's get started with using swings for support and resistance levels. So support and resistance levels in trading refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, and chart patterns. Additionally, you can also look at previous highs and lows of the asset, as well as volume data, to identify potential levels of support and resistance. So this is what we'll be focusing on today. It's important to note that these levels are not absolute and can change over time, so continuous monitoring is necessary. So I've added an image here for you to see how we can use swing highs and lows as resistance and support levels, but we'll go through a couple more examples in the next few slides. Take note of how there are clear peaks and troughs in the market structure in order for them to be used as resistance and support levels. Okay, let's first look at an incorrect example. So here's an example of an insignificant swing, which are typically bad points to use for Fibonacci starting and ending points, as well as your support and resistance levels. So in the GIF that I've attached here, it says they are bad to use for Fibonacci points, but this also applies for support and resistance. Okay, so the price movements in this GIF you can see are way too small, and there are no significant swing highs or swing lows. Here's another incorrect example. So there aren't really any clear swing highs or lows, and price movement is very small. Okay, so now let's take a look at a correct example of significant swings. So there's a clear move up and down with obvious troughs and peaks and very clear market movements, as you can see from this GIF that we've attached here. So I'll maybe show you guys where we've taken all of these GIFs from and a couple more that you will see in the coming slides. So if you go online and just search up the forexarmy.com, okay, it'll bring you to this page. And on this website, you can get a couple of trading guides. Okay, here. So how to draw a Fibonacci retracement correctly, as well as support and resistance guidelines as well. Okay, so this is run by our company as well. So we have all of these examples, which you'll see in some of the slides, and then some GIFs as well. So it goes through really comprehensively all of the basics that you need to know when it comes to technical analysis. So you can go ahead and take a look over there. Yeah, it's completely free. All of these guides, support and resistance, maybe let's take a look at that as well. So this is an indicator for MT4 that you can download for free. Yeah, and it teaches you how to use it as well. Yep, so you can go ahead and take a look at it at your own time. But yeah, just briefly wanted to mention this. Okay, let's get back to our slides. So here's the correct example. Yeah, you can see how significant or how clear these peaks and troughs exactly have to be. Okay, here's another example of significant swings. So I've drawn out the peaks and troughs to point out exactly how clear it should be. Okay, so you can use support and resistance levels as take profit, target, or stop loss levels, but you should not use it as an entry if there is no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. So using a recent swing high or low is a weak level if it is the only level. So something like this that you can see in the GIF, if there's only one swing high, it's typically considered to be a weak level. So something we want to look out for is multiple swings. So if at least two swing high or low levels line up nicely, it's a much better level to use because you can see that price has tested the level many times before. So we would try to find areas where these might line up. It does not need to be the exact level. As long as it's in area, it's near enough. So you can see in the GIF, we have a really nice cut with 4 significant swing highs, but you can see the wicks are kind of different. They end at different areas. So that's why we say that just a wick is, or rather just the area instead of the level, is good enough. So it's a good practice to see how far the resistance or support levels can go. So you can see instead of just stopping here, we're pulling it all the way back. So it's okay to cut through small wicks since these are typically areas of specific levels, typically areas instead of specific levels that you can see in this GIF here. Okay, so now let's move on to starting points. So now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? So firstly would be picking your starting point. So when picking the starting point of pivot, so for example, your entry, support, resistance levels, these are the rules. Firstly, you want to check if there is a swing high or low, pullback or overlap level to start from. We'll go through what exactly pullback or overlap levels are in a couple more slides. But we want to try and go as far back as possible without cutting through too many bodies of candlesticks. But intersecting the wicks is fine. So you can take a look at the image that I've included here. The orange thumbs represent an okay intersection because you can see they're not cutting through any bodies of the candlesticks, but they're just cutting through the wicks, so it's fine. Something like this is preferred, the green thumb, simply because we have a really nice swing high there. Okay, if it's just one cut of one body of candlestick, that's fine as well. Okay, now let's take a look at a couple more examples. So here we have our first red thumb. So it represents obviously an intersection that you should stay away from. So you can see that it intersects many bodies of candlesticks, whereas for the green thumbs, it's either just a wick or a couple of wicks, and that's preferred. Okay, so we want to look out for levels, just basically want to look out for levels that have clean cuts of just the wicks of the candlesticks. Pretty clear cut. So here's another example. Take note of the red highlighted area here because it intersects way too many candlesticks. Okay, so if you encounter an intersection that looks kind of messy, then you know that that's generally not preferred. Something that's just 1 week or a couple of weeks, that's preferred. Okay, so here we have an example of a clear market structure. We typically will look for charts that have this kind of a structure because it's way nicer to analyze on. So these are good for support and resistance levels. So like your graphical analysis. But of course, these are typically preferred as well for Fibonacci analysis as well. So here's an example of an unclear market structure. You can see how choppy the movements are. And it's just not as nice to analyze on this chart as compared to the previous chart. Because like I mentioned earlier, support and resistance levels, we want to try and pull it back as far as possible without cutting too many candlesticks. And in this case, it's really difficult to see how many candlesticks exactly it's going to cut. Okay, so here's just a bit of a sidetrack on the time frames that you can use. So one really important thing that we can do to find clearer market structures to do our graphical analysis as well as Fibonacci analysis is to adjust the time frames so that the market structure is clearer. So what might look messy on an M30 chart might look very clear on the H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed at that point in time. It could simply mean that we need to take a step back or sometimes a step forward to get a clearer view. Okay, so we're just going to introduce a little bit on multi-timeframe analysis. Just briefly touch on it since we are talking about support and resistance levels. So multi-timeframe analysis is a trading strategy that involves analyzing the market from multiple timeframes. So this can help a beginner trader get a better understanding of the market and make more informed trading decisions. So the first step in this strategy is to select the timeframes to analyze. Typically, traders will choose at least 2 timeframes, such as a short-term time frame, for example, 15 minutes, or a longer time frame, 1 hour or daily. The short-term time frame is used to identify the most recent trends and price movements, while the longer-term time frame is used to identify the overall trend and market direction. So once the time frames are selected, the trader will then analyze the market from each time frame, looking for support and resistance levels, trends, and patterns. So for example, if the short-term trend is bullish and the longer-term trend is also bullish, this could indicate a strong uptrend in the market. And the reverse is true, of course. The trader can then use this information to make more informed trading decisions. So overall, multi-time frame analysis can help a beginner trader gain a better understanding of the market, make more informed trading decisions by looking at the bigger picture, and analyze trends and patterns from the different time frames. So there is a brief rule, not super strict, but many traders like to use it. It's the 4 to 6 multiple when it comes to multiple time frame analysis. So the rule is if you are using if you're analyzing on a 1 hour time frame, for example, then you want to go up to a 4 or 6 multiple. So you can trade on the 4 hours or even the 1 week time or 1 day rather, 1 day time frame. So 4 to 6 times higher than what you are analyzing, higher or shorter. Okay, so here's an example of an unclear market structure from the 15-minute time frame. Okay, so it's pretty messy. There's no clear movement in price, and it's generally an unclear market structure. So when we change it to the 1 hour time frame, we can see that the highlighted portion has a much clearer movement. Okay, so there's two criterion that you should look out for. Firstly, a clear swing low or swing high. Secondly, a clear trend between the starting and ending point. Then your fib tracement is likely to be accurate. Okay, so even for graphical analysis, we're talking about support and resistance levels. A clear market structure is really important. Okay, so at the basics, the clearer the swing low, the clearer the swing high, and the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, let's see if there are any questions so far. Okay, no. So let's go ahead and get into what exactly is the pullback and the overlap. So let's start off with pullback. So a pullback support is a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So a pro tip, when a pullback support lines up with a Fibonacci level, it is very powerful. Pullback resistance works well when it breaks a significant swing low and then starts pulling back to it, even if there are multiple Fibonacci levels lining up with it. So we'll go through a couple more examples in the coming slides, but in this, you can take a look at this GIF first. So you can see we have a pullback support resistance here. So the reason why it's a resistance, there is a swing low here. Price has bounced off of this level and it's reversed and broken this support level. So once it breaks this level, it is now a resistance. Why do we call it resistance even though price hasn't reversed back yet? It's because we're expecting price to reverse back to it. So that's why we call it a pullback resistance. Okay, and the reason why we are saying that if you line up your pullback resistance nicely with a Fibonacci retracement level, which is what we're doing here, it gives you a stronger reversal, is because for pullback, the reason why we call it pullback is because we're expecting it to retrace or pull back to that level. So when you're using a Fibonacci retrace, of course, we're expecting it to also pull back to one of those levels. So here when we have a 38.2% Fibonacci retracement lining up nicely with our support level, and you can see we have a 61.8% as well that lines up. So we have two Fibonacci retracement levels that line up with our support pullback resistance level. So that's why it's so strong, because we're expecting it to reverse. So pull back and reverse off of the level. Okay, I hope that makes sense, but let's take a look at a couple more examples if you don't understand what I have said so far. Okay, so here's another example. At the red area, price has tested this level 3 times. So it's pretty strong. We have a multiple swing high here, but you can see price, it cuts through this level. So it broke the red area, and once it breaks through, it's now a pullback support. Instead of a swing high resistance, it's a pullback support. Why support? Because we expect price to pull back and retrace or retrace back to this level, as you can see from the arrows. Okay. Feel free to let me know if you guys have any questions. Okay. Similarly, in this example, we see price testing this green area 3 times, so making it a swing low support level. But you can see price has broken out of this level. Once price breaks the level, it becomes a resistance. So it switches over, becomes a pullback resistance, and we expect price to retrace and pull back to the same level as seen from this red arrows. Okay, here's another example. So here we have a significant swing low, and thus a possible support level. But once price reverses off this level and it heads back downwards, it breaks the level, it now becomes a pullback resistance. Now let's take a look and see if price actually pulls back to this resistance level. Okay, you can see that it did. It reversed back and it pulled back to this resistance level. So this is before and this is the after. Okay, so you can see price is approaching this same level, but once it reaches and reverses off and forms a swing high, it's now an overlap resistance level. Okay, so let's get into what exactly is an overlap. So an overlap resistance occurs when price reacts off a particular level from the top and from the bottom. So the more times that price reacts off of this area, the stronger the overlap area. This means that there are bulls and bears respecting that area, so it's an important area to take note of. Pro tip, if the overlap area lines up with other elements such as Fibonacci or graphical elements, it will make it even stronger. So same thing, you can take a look at this drift here. We have a swing low and a swing high that line up nicely at the same level. So that's essentially what an overlap is. So these are really strong levels because you can after that expect price to continue to respect that level. Okay, so you can see price did come back and retrace the level and then bounce back off of it. Okay, let's go ahead and look at some more examples. So here we have a swing low support that becomes a pullback resistance once price breaks the support at 105.643. Here we can see how price breaks the support level. So it breaks the support and then it pulled back or retraced back to that level and it reversed off of the level again. So once it reverses off it, it is now an overlap resistance. Okay, so initially when we have this blue highlighted area, it is a pullback resistance. So it's not overlap yet, it is only overlap once price reverses off of that level, forming a swing high. Okay, So now that we know what overlap and pullback levels are, let's combine them to find strong resistance and support levels. Okay, let's take a look at this example first. So here we have a big swing high resistance level. Price surpasses this level and becomes a pullback support level where we can expect price to pull back or retrace to this level. So we're talking about the red area first. Okay, we have a swing high resistance and then it reverses off of this level and then it retraces back, comes back to this level and then breaks that swing high resistance. Once it breaks it, it becomes a pullback support. Now we move into the green area. So we see price retrace this level and then it bounced off perfectly over here. Okay, so once it goes into the green area, it is a pullback support. Pullback support all the way until price bounces off the level. Once price bounces off it, it becomes an overlap support. Okay, I hope that's clear, but feel free to let me know if there are any questions. Okay, if not, let's go into the next example. In this example, we have two swing highs lining up. Okay, making it a multiple swing high resistance. Now here at point 2, price reversed off of the swing high resistance and then it retraced back and it actually broke out of the resistance. Once it breaks out of it, it is a pullback support. So then it continues and price has pulled back to our support and bounced off of it twice. You can take a look at the blue circles here. Once it bounces off of the level, even just the first time, it is an overlap support. Overlap because we have a swing high and a swing low that line up nicely together. Okay, so you can see it bounced off once and it bounced off a second time. And that's pretty typical of a overlap resistance. It's likely to test the level once again. Okay. Okay, let's take a look at the last example. So there are multiple swing lows here that are in line with the 33420 support level. So once price breaks this level, it becomes a pullback resistance. So it's a swing low support first, and then once price breaks the level, it is a pullback resistance. Once price actually retraces back and reverses off of the level, it is now a overlap resistance. And you can see it tested the level a couple of times, and then it broke the level again, making it no longer an overlap resistance, but a pullback support. Right? And then once this pullback support has retraced and bounced off of the level again, it is an overlap support. Okay, I hope that's clearer. So that brings us to the end of the slides. So feel free to let me know if there are any questions, but we still have some time, so we're gonna look at some charts together. So let me know in the chat if there are any specific currency pairs or commodities that you'd like me to go through, or indexes as well, and we'll definitely go through them together. Okay, and then we can take a look at some support and resistances as well as the time frames as well. Okay, while you guys are letting me know in the chat what you like to see, I'll go ahead and get started with DXY first. So we typically will look at the higher time frames first, just to get a general idea of where prices are headed towards. So on our weekly time frame, it's pretty bearish, the general direction, and then on our daily time frame, it's pretty bearish as well. Okay, so let's go ahead and start our analysis on the daily time frame. Okay, so we start off by identifying if there are any trend lines or trend channels. And over here, I have a descending trend line. Okay, next, I'm going to go in with my support and resistance levels. Okay, so when we're first going in with our graphical analysis, we start off by just identifying our first resistance as the closest swing high to where price is currently at. And then we see if we can pull it back any further without cutting too many candlesticks. Okay, so here's an example. Over here, I'm cutting way too many candlesticks. So I am not gonna put it there. I'm gonna put it over here instead. Okay, here's our first resistance. Next, for our first support, you want to place it at the closest swing low to where price is currently at. So we can adjust our support and resistance levels after we've taken a look at our Fibonacci levels as well. Okay, here is my second support. And my second resistance may be over here. Okay, so maybe just a quick recap. Here, price is at a swing low, and then price cuts through the resistance, the support level here. It cuts through, it becomes a pullback resistance, and then it moves back here, cuts through the level, and then over here, it becomes a pullback support. Okay, it becomes a pullback support. Once price, you can see price reversed off of this level, and then it becomes a overlap support. Okay, right at this circle here. But then it bounced off and it cut through again. And at this part where it cuts through the level, then it becomes a pullback resistance. Okay, you can see we retrace back to over here. So finally, at the circle, at my last circle, it is an overlap resistance. Okay. I hope this made it a little bit clearer in case you were confused earlier on. But now that we have that, we're going to get into our Fibonacci levels. So I'm looking for a Fibonacci projection. So for Fibonacci projection, we use these three levels. Okay, and I can see my 78.6 lines up nicely. Okay, and I'm actually going to highlight this level here at the 61.8 level because we have a swing low here. And price has tested this level many times in the recent past. So that's my intermediate support level. Okay, and my 100% Fibonacci projection lines up with my second resistance as well. Okay, now let's go in with some indicators. So I can see price is, okay, it's moving inside our Ichimoku cloud, so it doesn't really tell us anything, so we can move that. At our MACD, it's giving us a bullish signal. Now let's pull out another indicator. Okay, so we see this slight increasing trend line here. You can see it's definitely not horizontal. Okay, even though from here to here, we've identified that this is a support level. Okay, so this is we call this a bullish divergence. So we can expect price to continue to rise. Okay, but we won't go in for a buy towards or rather we might go in for a buy towards our first resistance, but only until this only until our first resistance. It's not likely that it will break out of the first resistance because we still have a lot of downward pressure from this descending trend line. And it's not likely to continue upwards. Okay, in fact, it's likely to maybe hit our first resistance and continue downwards instead. So this ascending or rather bullish signals are likely showing us that it's only going to head up towards our first resistance before continuing downwards. Okay. Let me know if there are any questions or any other requests that you guys would like me to go through. Okay, I think I'll go through maybe one more chart for today. Let's take a look at gold. Okay, so same thing, we'll look at the higher time frames first. We can see price reversing off of these three swing highs. Daily time frame also giving us kind of a bearish momentum. Okay. Okay, so we have a descending trend channel here. So now let's go in with our support and resistance levels. I'm gonna go ahead and analyze on our daily time frame instead because it's much clearer than our 4-hour chart. Okay, so that's why we mentioned earlier that market structure is important. Okay, so we can see price moving in this descending trend line. Now let's go in with our levels. So I have a first support, first resistance here, and then my first support over here. Okay, now let's go in with our Fibonacci levels. I have a retracement from here to here. For retracement, we use these 5 levels. Okay, and then I have another retracement here. And then projection from here to here. Okay, it's looking a bit messy now, but we're looking for levels in which that line up so that we can use them as our support and resistance levels. Okay, and here we have so I can see my 61.8 lines up. Okay, and then over here, I have my 38. Okay, now let's go in with some indicators. Price is moving below the Ichimoku cloud, giving us a bearish signal. MACD is giving us a bullish signal. Oh. Okay, so on our RSI, price is moving in a descending trend line. Okay, and on our stochastic, as well. Okay, so on our stochastic, it shows that price is likely to reverse off of the trend line. So that's what we can expect as well over here. Okay, so let me know if you guys have any other questions. If not, that's all for today. Thank you guys so much for joining me, and I'll see you guys next week. Bye!